time to take the show ahead, and I now have with me Abhijit Choksi from Stockify.in, and he'll be answering our viewers' questions live and will be doing their live financial planning. Hi and good evening, Abhijit. Welcome to the show. I have with me Mr. Koushik Nath on the show today, live. Mr. Nath, hi, good evening. You're calling from Hyderabad. How are you doing today?
I'm doing good.
Thank you so much for sending us your question. And you want to invest monthly 70,000 for 20 years, and you want us to rate your portfolio. And you've managed to figure out few funds: Nippon Small Cap, HDFC Flexi Cap, Motilal Oswal Mid Cap, 2,000 each in all of these funds. And you also have Edelweiss Business Cycle, SBI Contra, HDFC Focus 30,
No,
ICICI
sorry,
Dividend Yield.
sorry,
Yeah,
sorry
I can
to
hear you.
interrupt. For the first three funds, I want to invest 5,000 and
Right,
2,000 for the next three funds, starting from Edelweiss.
right. Yeah, we've got those details. Anything else that you want to add?
Uh, no, that's it.
All right. Abhijit, over to you.
Yeah, right. So, Kaushik, the best part about your question is that you have a solid horizon of 20 years, which is really good. The only thing which I would like you to consider is that rather than having a very large number of mutual funds, we usually suggest our clients to not have more than 4 to 5 mutual funds in a single portfolio. However, looking at your overall allocation, it looks balanced because I can see you just have one or two sector focused funds, and most of your funds are well diversified in small, mid, and large caps. Uh, Generally, we suggest clients to keep at least 30 to 40% in large caps and divide another 30% in small and mid caps. So, to answer your question, I would say your rating of your portfolio would be 7.5 to 8 on 10. You can consider switching some of these funds and consolidating them into a singular fund. Like, let's say if you have two or three small cap funds, you can consolidate and have, let's say, one small cap fund like DSP small cap or SBI small cap. So that way, you don't have to manage multiple funds, and you can, for you, assessment would be easier. Thank you.
All right, we move on and let's take Shanu's question. And he wants you to review his portfolio. I think you have his portfolio details in front of you, Abhijit. He's got a couple of small cap and mid caps in his portfolio, as I can see. So, yeah, um, where to exit and where to stay in his portfolio.
Right. So again, Shanu has divided his portfolio fairly well, although I would consider it mildly over diversified. The concentration is a bit larger in small caps, although he's just 34 years of age. He has a good risk-taking years for him on his side. I would not tell him to change anything in his portfolio. His time horizon is also pretty good. 7 to 10 years is something which we recommend all our clients to at least have that horizon if you want to invest in Indian equity or mutual funds. So 7 to 10 years is a good horizon. Instead of these three small cap funds which he's having, Quant, Nippon, and Tata, he can consolidate then that into one small cap fund. Either it could be a Tata small cap fund or an SBI small cap fund. So that would be my suggestion to him. And another question he had was that he has an FD of 75 lakh and he's getting 45,000 of interest every month. So his question was that whether should he be investing this 45,000 to SIP as well? And yeah, absolutely. That's actually a good, like a lot of our clients do that they have an emergency fund of X amount. In Shanu's case, it is 75 lakhs. So whatever income he's generating out of that FD, he can, if he's not using it anywhere, he should definitely do SIP with that amount. And my suggestion to him would be three funds. One would be DSP Small Cap, ICICI Blue Chip, and SBI Mid Cap Fund. Thanks.
All right, let's move on and let's get connected with Mr. Nagendra on the phone line. Mr. Nagendra, hi, good evening. You're calling from?
I'm calling from Noida, ma'am.
All right. I think you have Parag Parikh Flexi Cap, Quant Small Cap, Quant Mid Cap, ICICI Bharat 22 Fund of Fund. Uh, you want to know if these existing funds are good for you and you are looking for a return of 15% plus. Is that right? And how much corpus would you like to
Yes.
accumulate? Okay.
Yeah.
Sure. What's the amount that you're investing actually in these funds? Mr. Nagendra, how much are you investing in these funds?
Close to like 50,000.
Okay.
Right.
Abhijit? Yeah.
Right, Nagendra. So, generally, so far, all the index, if we do a combined calculation, the on an average returns of Nifty have been 11 to 12% in the range. And in general, if you have a well diversified portfolio, you can expect anywhere between 12 to 14% kind of return over a 10-year period. So that would, I would say, that would be a more reasonable return expectation from the market. Then obviously, if you're able to get beyond that, it's bonus. So just to set an expectation, I would say that please keep at least 12 to 14% kind of expectation from a diversified portfolio. I would not advise him to exit any funds out of this. Rather, he can add like a large cap fund because that is something which is missing. Some allocation you should definitely do in a large cap fund like an ICICI Blue Chip or a HDFC Blue Chip fund would make this portfolio a really well balanced portfolio, Nagendra. If you have any other question, please let me know.
All right. I think that will be all on the show because that's all the time we have. Abhijit, thank you so much for being a part of this show and helping our viewers plan their financial portfolios. And I'm going to leave our viewers with our WhatsApp number and email ID where they can send across their queries. Thank you so much for watching. Goodbye.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.